Seattle. We've got, as for showing PR professionals how to take a company public and beyond, I'm very proud to have up here Ken Schuman, Vice President of Communications for Trulia, who's very busy today because they have earnings tomorrow. So we're gonna not hit him too hard with questions because he's working on some hard ones on his own. We've got Karen Moran up here. She's head of investor relations at auction.com and has extensive IPO experience from her time at SAP and Market Street Partners. Please welcome Karen. From August Capital, we have senior partner David Hornick, who sits on the board.
I'm just a partner, not that senior. We're all just the same. Don't tell my partners, they'll be mad.
He sits on the board of one of last year's biggest IPOs, Splunk, and knows his way around the IPO barn quite well. And also from Bloomberg, many of us know our IPOs truly arrived when we get the call from Ari Levy asking us to confirm the banks involved. He's the senior tech editor at Bloomberg. Ari Levy.
I too am not senior. David and I work together.
All right. Senior in my heart, apparently. So I'm going to start the panel off with one question to all of you, sort of down the line, and it's an easy one, but it could go on for the rest of the panel, so I'll start. Does PR make an impact on a company's IPO? And if so, how? David, I'm going to start with you.
Well, you know, as we talked about these things, I started thinking about them. My biggest problem is that I'm an attorney by training, so I know what you're not supposed to do. So, you know, the attorney in me is saying, gee, it's not supposed to. You're not, that's not how it's supposed to work. On the other hand, we all know that that's absurd, right? That of course it matters, and that, you know, PR matters through the whole process, and that frankly, if you've done it right, the IPO is the culmination of a build-up to this moment, and so it's huge, right? But on the other hand, the second you file and you're out there, then you have to pretend you're not doing it. So I think it's this tricky dance. But the answer for sure to me is that it is the entire process leading up to the IPO.
And I think that's an interesting question to ask a PR person because of course it matters. But I agree with David. It's IPOs or the PR is important, but it is one part of your toolkit when going public, and it's a very important part. But there are many layers and things that happen behind the scenes. But it's really your public evaluation of how your IPO went.
Yeah, it's interesting because I think about PR kind of without the P, because much of it is reporter relations, and so for me a lot of it has nothing to do with what you're saying publicly, which may be nothing, but how well you're responding to inquiries about the company, with the understanding that there are things you can't say, a lot of things you can't say, and a lot of things that I can't say you've said, but there are understandings that we can come to about the company that would be hard for me to get to without your help. So whether PR is important, I'll let these guys make that determination, but certainly communication in general is very important.
Yeah, from an investor standpoint, the institutional investors who will take the shares on your IPO are not going to make their investment decisions based on anything that's in a press release. That said, I'm going to echo what David said, which is, they should be aware of your company. They should be absolutely, the PR leading up to the process can absolutely help. And one class of investors where I think it can make a difference during the IPO process is with retail investors, because the average investor is not going to get a call from Goldman Sachs or Morgan Stanley to have a management meeting during the IPO roadshow. So PR could absolutely impact, one, just the awareness for an average retail investor about what this company is doing an IPO. What do they do? Where do they go to the information? So I do think that it can have a positive impact overall.
Yeah, and I think of it as two sides. One is going public is a huge branding event. It's for a lot of you, it's your coming out party to the public who may not have used your servers, may not have heard of you before. So I do think PR is important, and I don't think it's going to move your stock price $5 on the first day you trade, but I do think you can have a dramatic impact on messaging around the roadshow, working with execs to create the right scripts, understanding what the bankers and analysts want to hear, and understanding what sector you play in. Are you a high growth company? Are you an enterprise software company? And playing to hot trends and helping in the background. And I believe that does drive value throughout the whole process. So I think you want to make a splash in the media, but even your bigger value might be what you're doing behind the scenes and the coaching you're doing with execs and how you're contributing to the overall perception of the company within Wall Street.
Quick question, just an observation. Last week, 11 companies had their IPOs, which is the busiest IPO week since November 2007. And this week there are 8 IPOs on the docket. Karen or David, I'd be curious to know, why do you think IPOs are hot again?
Well, it's easy because people are buying. That's what, and they'll just get hotter, right? I mean, the reality is that the markets have been pretty fickle, and frankly, and there have been good companies that have been building and waiting for the right opportunity. And when it looks like there is a market that's receptive, then people are thrilled to get their companies public, right? I mean, there are all sorts of challenges the day after you go public, but for many companies, this is the culminating event. You spend all your time and you're waiting. Like so many of things that I think about in the venture business, it's this surfer analogy. You're waiting for the right wave, and if you get it right, then you're gonna, you get to drive towards the beach at a nice speed, and if you get it wrong, you crash in the rocks. And so I think it feels like a good wave right now, and people are trying to hop on. And some people will be too late, right? And some people were too early, frankly, and they were punished. So it feels like the right wave right now.
Yeah, just to echo that, I think the IPO window is open. The stock market's at all-time high. The companies have been sitting on cash, so there's been a lot of M&A activity. So a lot of the higher growth companies either have been acquired before they did an IPO or have been taken out of the market shortly after they've done an IPO. And I think investors are really looking for growth opportunities, and to the extent where you have private companies that have the right financial profile, you put all those, all the stars are very aligned for the right companies to go public right now.
If I could just jump in with a slight counterpoint, I think it is important to recognize that it's hot relative to where it has been in recent years. But to say it's hot, you have to look at sort of what we're seeing in the private markets, which are, I think, more billion-dollar companies than we've ever seen, that in any other market would have been public several years ago. Not all of these, some of them have no revenue and are valued in multiple billions, but many of them would have been public years ago, and they just don't see the attractiveness to being public that would make them want to be out there. And so by the time that some of them end up going public, a lot of the upside has already been realized. And so part of the danger in seeing a hot IPO market is, what happens to these stocks when they actually go public, and do investors sort of get in and all of a sudden be like, I missed my opportunity?
Well, I think that's a fair observation. I just think that people are making really silly mistakes, right? I think that when you look what's happened, while that's true, most of the companies, most of those companies that have quote unquote realized the gains in advance of the IPO have done terribly. And even Facebook, which it's impossible to say it's done terribly, and it's growing, whatever else.
I think it's back to its offer price.
But it might be back to its offer price, and it had a catastrophically bad, IPO. Only from an actual IPO experience standpoint, right? So I just think that there are a lot of private investors who are being dumb, but that shouldn't be confused with what's it's not. In the end, it doesn't make any sense to invest in a company at a very high price if you don't think it can be liquid at some point. And the only way you're getting liquid is to be bought or go public. So in the end, these companies have to be public companies. I agree, hot is in the eye of the beholder, right?
I think, my journey over the past year is sometimes I can't understand what Wall Street thinks, even if it seems clear as can be. One day you're great, one day you're not. Leading up to it, you get advice from lots of different people, from bankers who want to take you public and tell you now's a great time, the market is open. And then you look at a Cafe Press, or you look at a GoGo, which just went in drops in the first week. So the bankers still made their money. they're happy. But what does it mean for you in your company? What does it mean for the quote-unquote crisis PR that you're now facing, that you have to go out and continue to tell your story and say why there's a market for you and why you're going to recover. So know that you will get, it's like we're a housing website, and most agents will tell you it's always a great time to buy a house. How did that work out for a lot of people over the past 10 years? So just get lots of different advice, and don't think just because the market's open we have to take advantage of it, because the reality of that is short-sighted based on, do you have a sustainable business that people will invest in and continue to grow with and actually continue to believe in you. Because once they stop believing you in Wall Street, then you're really in trouble. And then the media don't believe in you, and all they look at is your stock price, and no matter how good things are at your company, you'll never get those stories to come out.
Quick question for all of you, but I'd be curious to hear Ken and Doreen's take since they just went through it. When do you start thinking about a PR IPO strategy?
Well, I know for Tableau, you know, the intention of the founders was always to take the company public. It was, you know, something that they've been talking about since the beginning. And so, you know, I've been with the company for 2 years, but I think the planning started before that. About a year and a half before our IPO, we really, you know, had a sit-down conversation about it and started talking about, you know, this is what we're going to do at some point, and so we really need to think about what leads up to that and how we prepare. So it's, you know, our company was around 10 years before we went public, and I think the planning started the day they got their business license, really.
For those of you out there who do know me, you'll know I'm not subtle. Carries through to my PR program and my approach. So when we hired Paul Levine, our COO, which was 18 months before our IPO, in his announcement, the sub-headline was Trulia building IPO-ready management team. Like, I wanted people to know that this was our ultimate plan, that this was a major hire, a big step in that direction, because as you get to the end of the year, all those lists come out. 10 companies to watch for next year that might go public. And I wanted to be on those lists. So why not tell them that we're building an IPO-ready management team, and those are our aspirations. And we did that in February of 2011, and we didn't go public till September 2012. So then I had an 18-month ongoing dialogue around that, and then as it gets closer, as David says, you start to peel back that language, and you don't use that as your hooks. You don't talk about, you talk about the business a little differently, but now I've had 15 months to educate the media on our business model, the growth, the success we're having all along the way, and it got on their radar screen. So every company is different, every PR professional is different, but I was pretty front and center and out there on what this hire meant and where we were going.
And once you stop talking about it, that's when we know it's getting close.
Just out of curiosity, all right, to lead up to your point, when does the company get on your radar? Is it when they stop talking, or is it before that?
Yeah, I mean, you know, we all have different radars, and a lot of it depends on what you're particularly interested in, and I have particular interests within technology that you know, that lead me to companies that guide me to companies that are sort of leading in their space. And so a lot of it has nothing to do with IPO plans at all. It's just, you know, building cool products, disrupting interesting markets, potential to do cool things. And yeah, it's great to be, it's great to have a relationship for when the time comes, whether it be an IPO or an acquisition or whatever. If my bar is strictly, you know, when does the company get on my radar because they're an IPO candidate, it's going to be when you know, when things start to happen that would lead me in that direction, whether it's, you know, a competitor gets taken out at a high price, you hire a CFO, you know, you do particular things that make news, or you even say in a hire that, you know, you're planning on going public. But those are important cues, because I want to have relationships with those PR people well in advance of the actual IPO conversations happening. I want the PR people to know that by the time those, you know, by the time we get to that point, there are certain things they can trust me with, and perhaps trust me more than they can trust other reporters. And so, you know, what the radar is depends on what the company is and what we're talking about, but definitely the earlier the better for companies that I care about.
I think it's quite interesting. I think earlier the better is sort of the mantra for everything we're talking about today. Make sure you've got the relationships with the journalists earlier rather than later. Make sure you start your planning earlier rather than later. I think one of the great things about IPOs and the whole IPO process is, we talk about the quiet period, and during the quiet period, there are things you can and cannot talk about. But one of sort of the SEC's mantras in that regard is, if there's precedent, you can do it. If you've got a product launched during your quiet period, it's not that you can't talk about it. It's just, what have you done historically in the past that if you've done it historically in the past, you can do it again. David, I just sort of want to ask you a question about sort of what do you look for in, from a venture capitalist perspective, what do you look for in leadership leading up to a company going public and beyond?
Well, we joke at Splunk and that Godfrey Sullivan, who came in as the CEO, is right out of IPO central casting. I mean, he, if you were to kind of describe, if you were to create a movie and cast someone, you'd cast Godfrey. But on the other hand, the reality, as far as I'm concerned, is that the thing that drives the success or failure of these IPOs is the success or failure of the business. And you can push out the outer, edges of it and make people more excited or less excited, get retail investors excited, etc. But if the company's not doing something interesting and is not performing financially, then it doesn't make a bit of difference. So from my perspective, our focus is 100% on building the team that's going to drive a great breakthrough business. And then, as you say, the beauty of it is you're always allowed to talk about that stuff. You can't talk about what impact it's having on the business. You can't talk about how everybody's buying it, but you can always talk about how you've created something that's changing the nature of how people, build their business or do whatever. And so, all things being equal, you'd love to have someone who speaks well to Wall Street and has a history with that and all those things. But CEO of Trulia was a student of mine in GSB. He's a great guy, but he hadn't been a public company CEO. No one was worried when he was producing a very interesting business, and as long as he continues to demonstrate results. It's not, people aren't, so I'd say find great people to run your business and then focus on the business.
Great. For the panel, I called up Judy Shaw. She's the media relations manager for the New York Stock Exchange. And I asked her what she thought were keys to IPO success from a PR perspective. She highlighted 3 things, and I'm just going to read them off very quickly. First one was a company that embraces PR, both as a private company and as it transitions to a public company. The second one was understanding the quiet period. And the third, to David's point, was making sure the CEO and company execs are prepared for the spotlight and the media. It's on this third point that I want to share something I've observed of executives that I call sort of the Bull Durham factor. And if you've seen the movie, you'll know what I'm talking about. CEOs, about 2 weeks before going public, they'll huddle, and I've seen this several times, they'll huddle with their PR professional if they've got a good relationship with them. And pull them aside and say, look, I want to sound unique and clever for sound bites for IPO interview day. But I've found that, and hopefully you guys will agree with me, that the street just wants to see that the leadership is stable and has an even head at the helm. As PR professionals, it's our role to be sort of Bull Durham's Crash Davis to the CEO's Nuke LaRouche, and basically drive home the messaging from that movie that basically says, taking it one day at a time. I'm just happy to be here. Hope I can help the ball club. I don't want to put Ken and Doreen on the spot to get you guys in trouble, but I guess the question is, how do you rein in your CEO's enthusiasm and sort of selling instinct on the roadshow to the muted non-hyperbole of the media interviews on IPO day?
Well, I think at Tableau we're very lucky to have our CEO, Christian Chabot. He's, he had never been a public company CEO before, but he's an entrepreneur and he was really made for this. I mean, he is, he's just great, like Splunk CEO. And he started out, as a sales guy, and, of the 3 founders, he was the sales guy from the beginning. And so he has that sales instinct, and I think the roadshow, that suited him very well. And then what we did the night before our IPO is, you know, we brought him into a conversation. Paul was there, and our PR agency, Merit Group, was there, and we just said, okay, you know, you've been on the road, and you've been in sell mode. This is a time to take a step back and really focus on what the messages are. And you know, we had prepped him before the roadshow for IPO day PR-wise, and then we brought him back to all of that and said, okay, here are your PR sound bites, which are a little bit different from your roadshow sound bites. So, and he adjusted to that very, very well. You know, he's just smart, and he's a natural with the media, whether it's print, broadcast. He's just he's an outstanding spokesperson for us, and so I think he adjusted well and made it through, you know, IPO day, which was 26 total interviews, one every 20 minutes after we priced, and so I was really impressed and very proud of him for being able to take that step back and get more into PR mode instead of sales mode.
Yeah, I think what we're hearing is every CEO is different. Pete's not naturally a sales guy. He's more of a media guy. So to have him come back out of 10 days on the road, 14 cities, 60 meetings where he's selling, and say, all right, now let's go back to natural state of being humble, talking about your business. For him, it was a natural transition. I think the hardest part about the transition is just the pure adrenaline and excitement of the IPO day. This is Christmas morning for your CEOs, and Christmas morning of a 5-year-old, where they wake up, they see all these gifts, they want to unwrap them, rip them all open, smiling, grinning ear to ear, and how do you can't rehearse that. You can't rehearse pure adrenaline. You can't coach pure adrenaline. So I think when you're thinking of the day of, that would be the biggest advice I'd give is like, no matter how good they are, know they've never experienced anything like this. No matter what strengths they're strong at or where they need work, know that pretty much you can throw that all out the window. And I would say give time. We took the opposite playbook of Tableau. We only did, I think, 8 interviews the day of our IPO. We kind of let our story is very easy to understand. It's a clear market that we play in. The stock got off to a great start, and we just let the media tell the story without us having to go out and sell the story. So my biggest learning is actually just think about your lineup of interviews. When you're in that pure glee moment and you're on all that adrenaline, is it best to be on live broadcast? Or is that the best time to actually say, you know what, I want to do my print interviews first, where you can come down off that high a little bit and then go on to TV afterwards a little bit more composed and ready to make sure you're hitting your sound bites. When you're doing a print interview with the, say, Deal Book or with Wall Street Journal, you're in a conference room at the New York Stock Exchange, you can put the talking points right on the table right in front of your CEO and say, here's the 3 that we want to hit on this one. Or when you're on the phone with Dan Primack, you're like, lead with this one first, then that one. And no one sees you. When you go straight on to a Bloomberg TV, a CNBC, you're completely exposed. So know your CEO, know what he's best at, and then think about the order of interviews is probably the best way to control that adrenaline.
Thanks, Ken. You know, there are a lot of things with the IPO process on the PR side that we're glossing over today for the sake of time, and it's just a great subject to talk about. You know, for example, S1 messaging, who gets involved? Is it the PR people? Is it the IR people? Is it the legal folks? Is it a combination of all the above? You know, the roadshow, does the PR professional have a place on the roadshow? You know, hands if you agree, I'm up there 100%. The PR people should be involved in the roadshow as much as the IR and legal people will let us. But again, there's a lot of ground we want to cover. And Ken talked about it quite a bit, you know, how IPO days is when the spotlight shines brightest, especially for the PR people. But sort of for the company itself, you know, Ari, this one's for you. Are there any PR don'ts for PR professionals during the IPO process, whether it's at the beginning stage or IPO day and beyond?
Yeah, I mean, you know, again, I think part of the coming in early and being part of the team is that you know the business, and you can be a spokesperson for the company and for the business, knowing that there's this relationship, so that you're not going to get outed if you say something. And so, if you want to be off the record, but don't be a, as we like to call them, a no comment monkey. You know, it doesn't do anyone any good for you to no comment when we all know that you're going to no comment. That's fine. You'll have a no comment in the story, but there's something that there are stories within your S1. There are stories within your company history, within your CE, the history of your CEO, the experiences of your CEO that some reporters actually want to write about during that run-up to the IPO. If you can't be on the record saying anything, that's totally fine, and that's understood. But there's background information that we want to make sure is accurate. There are growth metrics that we want to make sure, if we go with these metrics, even if they're in the S1, that we're characterizing them in the right way. Maybe we haven't scanned all 127 pages of the S1. Maybe you can point to, you know, page 62 on a footnote and say you may want to look at that. There are really important things to do to guide how you want the story to be told at a time when you can't really say a whole lot. A lot of reporters aren't going to be interested in any of that, so you don't have to worry. The only questions they're going to come to you with are things that you can't comment on and can't help with. But in terms of the actual backstory and sort of the nitty gritty, getting your help in telling that story is beneficial, I think, to everyone, because it actually gets you some free publicity.
Can I add to that?
Yeah.
I think Ari nailed something. Your S1's 100 plus pages. Have your own cheat sheet ready. So you can't say it, but if it's out there and it's public, you can make sure they know where it is and point them to that. Because A, it will be a better story for your company, and B, you will make a reporter very happy that they got what they need and they don't have to dig through all 100 plus pages. I think another thing to have in your back pocket is you can't talk, but if you say to a reporter, you may want to talk to so-and-so. So whether it's about their character, whether it's about how they're an operational wizard or whatever it might be, like have a few references or people that you could maybe point a reporter to, and that can really help tell a better story for your company or the personality of your exec that you want to get out and win some points with the reporter as well.
I'm going to throw a very broad question out because to sort of wrap up, because I know you guys have some questions as well. But a couple of quick points. One, you know, we've got two very interesting statistics here, two pieces of information. Yesterday, Facebook closed at its highest price since IPO, which was one that a lot of people said, you know, they bungled their IPO. So it's interesting to see over a year later they're back. And sort of the wagons are gathering around Twitter's IPO. Just several questions. You can each choose to answer which one you like. Any surprises in the IPO process of any company? Who's doing it well? Who isn't? Who did it well? Who didn't? And sort of, if you were to sort of give one piece of advice to the crowd here about PR and IPOs, what would it be?
I'm going to give two pieces of advice, not one, but I'll make them quick. First, pit the New York Stock Exchange against the NASDAQ and get as much out of them as possible before making your decision. You've got all the negotiating power. They want your business. What are they going to give you in return and what's most important to you? And don't be shy to ask for whatever it is that you want. Number two, become best friends with your general counsel. You will be on the phone with him at 4 in the morning. You will butt heads with him because he will not want to take risks and you will naturally want to push a little bit further. And you want to have an open dialogue and find precedent that other companies have done this so then he or she starts to feel comfortable with it. But I had a little running joke with my general counsel. I'd be like, score 1 for Ken. Shit, score 1 for Scott. And like, we would keep a running tally because we had a good relationship and he was open to me pushing him and then he was definitely open to pushing back on me, but we did it in a good, friendly, fun way. Because you're going to have a lot of those conversations going through the process, so try to develop that strong working relationship.
Yeah, I'd also echo the pick the NYSE. As someone who's worked with both exchanges, I can tell you, I would just echo everything that Ken said. I think the other thing that I would recommend is just understand the process You know, the IPO process is unlike anything else. There are a lot of quirky rules and regulations along the way, but if you understand the process, you can figure out very quickly exactly what you need to do at what points of the process to maximize the exposure for your management team, for your company, and to make sure that you're getting the most out of IPO day.
Yeah, I'll just highlight a recent one because I just wrote about it, the Retail Me Not IPO from 2 weeks ago. So I watched the roadshow, the video roadshow, and there's one, I was looking for a way to write about the company, Austin, Texas based, and not a particularly well-known brand, but a lot of money. And so I was watching the IPO roadshow, and this is coming off a really slow period for consumer internet IPOs. And the CEO says we have a 94% gross margin. Now, it's not a hard number to come up with. You just look at the revenue and you look at the gross profit and you come up with margin. But we're just not likely going to look at that number given that it's only one of thousands of numbers. But I was quickly able to do a search on Bloomberg and find that in the S&P 500, there's only 2 companies, maybe 3 companies that have 90% plus gross margins, and they're old software companies. Facebook is in like the 70s. Groupon, which would be the closest comp as an online coupon company, is in the 60s. But here you have a company that's going public with a higher gross margin than any company in the S&P 500. That to me was a statistic that if I were on the PR team, I may have tried to sort of whisper in someone's ear. I actually think they did a reasonably good job on their PR, but it's one of those, it doesn't do you any harm in whispering that in someone's ear because it's all public, but hey, you may want to take a look at the fact that we basically have no cost of goods sold in our business.
And I think one thing that hasn't been brought up yet is internal communications within the company. And the time we went public, we had over 800 employees at Tableau, and our CEO really started, even as far as a year in advance, talking about one day we're going to go IPO and here's why. And these are the things that you need to know as an employee of the company. And so I think by the time we did go public, everyone in the company was bought in to, these are the reasons, this is why we're doing it. And, because I think it's important that, your employees stick around once the IPO is over and do a good job of retention. And so that was very important for us. And the other thing that Ken brought up was the team, investor relations, legal, the VP of BizDev that we brought on about a year before our IPO, really knowing who are those people who can help me out and how can I help them, and making sure that you're working together. That was crucial in our IPO.
The one thing I would say, it's interesting to watch the difference between a brand name company that's going public and an enterprise business, right? I mean, Splunk or Tableau, when they were going public, it wasn't about getting retail customers excited, right? It wasn't like your average buyer of 10 shares of stock was going to get excited and buy either company, although they should have. And so you need to understand that the strategy coming up to and the building excitement around a Trulia or a Facebook is very different from an enterprise business, and who's the target, right? Well, ultimately, who's the target that you're trying to reach? And I'd reach back to what was said earlier, which is this is a building process, and you're not going to change your behavior or the perceptions of the market overnight. So you better start early, messaging to the people who you want to be excited about this offering, to let them know that there's a great business being built, that there's excitement coming, so that when it shows up, it's not a surprise, because people basically think surprises are bullshit. And so, it's got to be like, oh, this is the natural culmination of what we knew was coming. Great. And it turns out to be true, 94% margins or whatever. Although if you like Retail Me Not, you'll love Ebates. Just saying.
I think Dave summed it up nicely. Surprises are bullshit. That's kind of a good mantra for everything we do in our business. I want to thank my panelists for being here today. I know we've run out of time for questions. But we'll be around. We'll be sitting down, huddled around over lunch. So if you have any questions, come on over and we'll be happy to talk. Thank you.
Thank you, guys. Let's give them another round of applause, guys.